Hello, everybody. So today I want to briefly talk about the rocket company question. And it's a big question because we've heard about rocket companies for maybe the past, 3 years or so. Lots of SPAC in the space, and so one of the questions that I ask is: are rocket companies investable? Are they investable yet, or are we way too early? And it's a tough question, and I guess my response is going to be because the Fed has changed course right now. Everything is a little bit different, and we may have been at the right time in 2020, but we're not at the right time anymore because the Fed has raised interest rates, which is going to make a lot of these companies have a hard time funding more for their future rounds. And so, one of the key problems I believe with a lot of the SPACs in the rocket space and a lot of rocket companies is that they theoretically trade on this unlimited total addressable market narrative, which is theoretically true because you're exploring space and there is no limit to space. But I remember during the SPAC boom, a lot of new issues, they trade on narratives, and that narrative was very, very, very strong. That yes, what is the size of space? Well, the size of space is huge. It's much bigger than the size of a world economy. Space is the new frontier, right? You have the moon, you have Mars, you have colonies that and billionaires like Jeff Bezos want to create in space. You also have no limit for resource extraction, right? That's something that was commonly discussed during the SPAC boom in podcasts, etc. Is that yes, you can mine asteroids. You're not limited or you're not constrained anymore by atoms, right? It's like you're turning atoms into bit in a way. If you have this space exploration vision of the world, you also have new colonies, right? They would probably be colonies before they are countries of private space stations, the moon, Mars. It's like it's so deep thinking, it's so long-term thinking that it almost seems comical to think about that, but it's not, right? I mean, going on the moon, people probably couldn't believe it in '69 when that happened, and science fiction, a lot of things that are typically under the purview of science fiction have become true. So I don't want to undermine space at all. On the contrary, I think it's very promising, everything that's discussed in space, and it's moving faster than a lot of people imagined. Right, what SpaceX has been able to do is amazing, moving faster than a lot of people are imagining. I remember when they stopped the space shuttle in the U.S., people kept to say, "Oh, that's it. The U.S. is never going to send a man or woman in space for the next 50 years." And it happened in what? It happened in 9 years, 10-ish years. So it's moving faster than a lot of people believe. There's also bonuses in the space company, which are more near term, which is what I don't think these companies trade on. But you have a disruption of communication, which is a big thing, which for SpaceX would probably be a separate company. Starlink, they would probably IPO that. You have new forms of tourism, right? That's what Richard Branson's Virgin Galactic is trying to promote. And more down the road, you have a disruption of air travel with the whole idea that if you can fly for an aircraft that can get to space, well, yes, you can do like New York to Shanghai in like 45 minutes instead of 15 hours today. So that's kind of the bonuses here. There is no doubt that the narrative is strong, another issue I think that a lot of us have, that I have, frankly, with space, I've always refrained, aside from the last stock I'll talk about in the video, but I've always refrained to invest in that space because I think they're too cool. I think they're amazing, and I think a lot of people, maybe guys more than women, think space is amazing. It is amazing. It is amazing. Most people think they're cool, and so when you think something like this is amazing, I mean, look at the rockets of SpaceX. It's just, to me, it's great. But you have biases, right? You have emotions, and once you have biases, a bunch of biases and emotions, it's impossible to entirely remove them. But sometimes these biases can be so strong that they can be the main reason why you buy the stock. And I think that's kind of a perfect recipe for what happened. If you look at Virgin Orbit, they filed for bankruptcy. When they filed for bankruptcy, I actually looked a little bit at this company, and I was thinking, how is that possible? That, I mean, this company was amazing. Some of the stuff that they were doing, I mean, they were putting giant rockets under the wings of a 747, and then the rocket would detach and launch into space. That's just cool, you know. But the company was not able to get a new round of funding. They were not able to get a new round of funding, and then they had to file for bankruptcy. And it's hard for Virgin Galactic too. And I'm kind of afraid that Virgin Galactic may take the same path as Virgin Orbit. And you know, that's kind of a key point here. These companies, they're gonna need second rounds of financings and third round on financing. And so SpaceX may be okay because they have Elon Musk, and we know Elon Musk has no issues selling Tesla stock to finance any project. But for the rest of them who don't have centi-billionaire founder, for these other startups, you may get into a lot of issue where you need to find capital, and space companies get a lot of capital, and I just don't want to be the early capital that gets squandered. I don't want to be the early capital that gets squandered, which is kind of when I approach these stocks, margin of safety takes a special place, right? It takes a special conversation if I were to ever touch one of these stocks. And I'm afraid that the following steps may happen. And this may be a Richard Branson thing, by the way. I'm not sure this is something that all companies would do, although many companies would do that. Is I'm afraid of the following steps. Is you have this whole idea of, you know, pre-revenue company goes public, develops the product never reaches revenue, and then the company goes bankrupt. And then the billionaire has to come in, has to, quote unquote, and buys back the assets for pennies on the dollar at bankruptcy court, which is a classic pattern that we often see in business. I remember a few years ago that was happening for retail, a lot of retailers going bankrupt, and a lot of bigger companies buying the stock at the physical stock at bankruptcy court. Well, this could be one of these things where yes, a rocket company just went bankrupt, and this bankruptcy court gives you the assets for cheap, and you know, of course, the shareholder gets wiped out in this setup. So I really don't want to be in this situation. And like I said, I think space is cool, as I said in the prior style. Therefore, this is where it gets a little upsetting for me, which is the Fed reversal. When you IPO'd, right? When you IPO'd in 2020, you have to put your back as the founder of these firms. And remember, these firms were started, for many of them, way earlier than 2020, right? There's an entrepreneur, there's someone's life and hundreds of engineers' lives behind thousands, even for some of those behind these companies. When they go public, you know, this is the narrative that they heard when they went public. Not thinking about raising rates until 2024. That was the narrative. So if you go public in 2020, thinking, okay, well, they're totally not going to raise rates, and they're like, okay, well, we'll you know, maybe there'll be, you know, 25 basis points rate sometime in 2024. We'll be fine. We'll be able to go for another capital raise, and that's because that's what the Fed had telegraphed. So if you're a space company, you probably went public thinking there would be no problem for you getting a second round and a third round of share offerings. Of course, we all know that's over. We all know that's over. We all know that a lot of pre-revenue companies today, they can't go public. They are not going public because they know that the funding has halted and that the Fed has stopped. The Fed now is focusing on the reduction of money supply, which I would argue is going to do much more harm than good, as we saw with the banking system. And let's see what happens in the commercial real estate and insurance fields and auto fields. But anyways, that's not for this video. That's for another video. So the Fed clearly is hurting these companies who may have to go for another capital raise. They just won't be able to, and so this is just delaying innovation at the end of the day. Initial thoughts on RocketLab. I know multiple of my viewers asked about RocketLab in the comments. I'm just addressing it briefly. You know, I don't know much about this company. I don't know about the qualitative element, but I think it's important to see where they even pass the financial element. And so when I look at a company like RocketLab, it's a question of cash burn to me. They're not optimized for gross margin, right? Their gross margin is 9% right now. I don't think it would be fair to judge them on that. There's no way they're optimized for gross margin. they don't have the scale. There's just no way. So it's bad. It's a bad gross margin, but it's better than a negative gross margin for sure. I was definitely expecting something negative as far in the way of gross margin here. It's not. Revenue growth is A+ for RocketLab, but there's a deceleration, and so you have to ask yourself: is it because you're dealing with a few $100 million even in revenue now, and therefore you have a law of large number that's stacked against you? It's easy to show growth when you're having your first few sales, right? Also, one of the questions that I ask is how many companies have the budget right now for satellite launches and space launches when the Fed keeps raising rates like that. I would argue that a lot of companies have that on hold right now, and so maybe that explains part of that deceleration in revenue growth. The negative free cash flow, and this is actually a positive here. This is I was pleasantly surprised. I was expecting way worse. The free cash flow is they burn 82 million. So they burned 82 million over the past 12 months. Keep in mind, this is a pre-revenue company. This is a R&D company. The main business for now for this company is research and development. That's the main business. That's what they do. But they have 472 million of cash on the balance sheet. So that's really good if you think about it, because they probably been managing that cash burn really well. And that means that, per my calculation, with that cash burn, they have 6 years worth of cash that they can still burn. So that's actually pretty good, because my fundamental belief on this channel is that the Fed will pivot sooner than most think, and I've been thinking that for a while, and it will happen. One could argue that the BTFP program is a form of QE already started, that they implemented for the bank. At least I could argue that. So, but anyways, let me know your thoughts about RocketLab in the comment section. This is actually much better than I ever thought with those numbers. So I may do an analysis for the channel. Let me know your thoughts in the comment section about this. Let me finish by telling you what I'm doing for space. And if you've been watching the channel for a while, you know that my exposure to space is through SpaceX and through Google. And this is the best way that I've done. So as you know, I have a part of a portfolio which I don't consider my portfolio. I consider it my savings account position, because beat the denominator of the name of a channel. Obviously, with a name like that, I don't want to own cash, and so I don't want to own cash, but you still need to have a few savings. So I'm looking for like very stable, steady Eddie stocks that are in technology, typically big tech. And so Google is what I call a savings account position. I don't cover it on the channel because it's not a stock that I expect to beat the denominator. It's a stock that I expect to just act as a savings account, no more. But by owning Google, one of the things that you get is SpaceX. You get a little piece of SpaceX. They own let's call it 7% of SpaceX is what they own. So 7% of SpaceX, it's amazing. And with that, if you have a bigger, like I say, a 10% position in Google, well, that gives you an exposure to space that may be just enough, that may be warranted. So I like having exposure to space to SpaceX with Google. I think it's very helpful, and one day SpaceX will go bankrupt. That value will realize, and if at that point you own some Google stock who owns about 7% of SpaceX, you'll get that exposure. And I made a whole video early days on the channel, really one of my earliest videos, about one of the key reasons why I own Google, and that's that SpaceX exposure, which I like in Google, 7% of SpaceX. So anyways, this is not investment advice. This is just entertainment. I hope you were entertained. Thank you for watching the video. Please like, please subscribe. Have a happy Easter if you're watching this on the day that this video gets out. Thank you, and have a great day.